Hello everyone and welcome to my morning report chart analysis videos on Thursday the 8th of November with me, Richard Perry, market analyst at Hantec Markets. There's still a reaction that we're seeing out through the markets to these midterm results, and what we've seen is that the dollar has sort of fluctuated around, really, not really shown any real direction off these midterms. You can see that we had the initial move to the downside that was actually retraced on the dollar index yesterday. Similar sort of situation where treasury yields were fluctuating but actually closed out the day broadly as they were. So little real direction, and you can actually see that the track of the 2-year yield, for example, continues higher as the expectation is that the Fed remains on course for its monetary tightening. And this is what we're focusing on today with the FOMC now, the meeting announcement this evening for the statement we're going to get this evening at 7 o'clock. This is a meeting, or a Fed meeting, where you're not got a press conference or the economic projections, so it's unlikely, or certainly the market is almost guaranteeing, no movement on rates tonight. Although there could be a slight tweaking to the statement in some sort of hawkish capacity or other, but certainly at the moment there is a sort of a feel that there's going to be a little real movement, I think, from that FOMC meeting. Now, in terms of how markets have responded to the midterms, well, generally speaking, it's the equities that have shown the real movers. Look at that move on S&P 500 yesterday, 2% higher yesterday. Futures are just ticking back a little bit today, but European markets are still fairly positive. They showed gains yesterday, continued gains into today's session, but it'll be interesting to see if the exuberance of yesterday's Wall Street rally continues, because, to be honest, a hamstrung Trump in terms of the House of Representatives that the Democrats have taken over means that perhaps his domestic policy agenda is going to be put on hold to an extent. You can argue that the positivity of perhaps a less belligerent Trump on an international stage is one of the reasons why we saw equities and Wall Street strongly higher. But generally speaking, I don't really see it as a sustainable move. But still, it'll be interesting to see if it continues. But S&P 500 futures are currently slightly weaker today. So, in terms of data points other than the Fed tonight, we've got weekly jobless claims at 130, 214 expected there, which was where we were last week. Now, my chart today is the Aussie dollar, which I think has shown some significant improvement actually in the last week, following on from that really strong bull candle we saw last week, last Thursday that was, continued higher today. In the last week has continued higher, and is now meaning that the Aussie dollar has broken a 9-10 month downtrend and is now testing this key resistance of this pivot, 73.10. Now that is a key pivot that if you really do see a break through 73.10, that is the first real suggestion that the market is turning around on a sustainable basis, because that is the latest key reaction lower high, and would complete a larger base pattern. It's already completed a small base pattern, which actually implies 73 figure, so it's achieved that target. But if you see a breakout above 73.10 on a closing basis, then that would be a considerable turnaround. You're already above the 89-day moving average, which has flanked the track lower. You've got momentum indicators. Look at that RSI 65, highest since January, since the sell-off began. MACD line's now accelerating above neutral. Stochastics positively configured. This is setting us up for a test of this resistance overhead at 73.10, which is, as I said, a key level. And a breakout for that would complete a base pattern and a breakout, and would then start to mean that you'd consider a new turnaround for an uptrend. So that's why it's such an important level. Now, looking on the on the hourly chart, sorry, that's FTSE. On the hourly chart, we've seen this continued positive configuration throughout the recovery. 40 on the RSI, supportive, above neutral on the MACD lines. It's looking pretty positive, and weakness is being brought into that little correction overnight back to 72.60. That was your breakout support, finding support there. So you wouldn't really want it below 180 certainly, and the initial support, you could argue, yesterday's sort of fluctuating traded low at 72.10. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.